So many of you have been asking me about my opinion on Costco stock. It was trading over $600 in around April of 2022, and now it's trading around $478. Many of you are asking if Costco is maybe a buy, as it's more of a safety stock, is gonna do well if we have a recession, if we have inflation, whatever we have. People need groceries, they need to put food on the table, and they're likely going to kind of prefer going to something like Costco or or Walmart or many of other things because they can't really cut back on food. So that could be a pretty interesting play, especially that it's down from $600 to $478. But in this video, we're gonna go in a little bit deeper. Maybe many of you guys like me because I kind of go into some things that I see as a red flag or some things that I don't really like. And there are some things I don't really like with Costco. So we're gonna take a look at those things, go into my valuation model, and determine if Costco is a buy right now or if it's maybe something we should wait on for a little bit more. So again, I hope you enjoy this video. So again, looking at the earnings report, there's nothing bad you can say about Costco. Despite this bad environment that we have, the company is still, growing revenue around, 10%, which is not bad at all. Gross profit is up a little bit, operating income is up, net income is up. Everything is pretty much amazing in terms of the, revenues for Costco. Maybe, their shares outstanding went up a little bit, so it's not much with buybacks with Costco. But again, the income statement or the earnings report actually looks pretty good. Looking at the balance sheets, they have around, 10 billion of cash. They have around 43 billion of total liabilities. But again, Costco is a free cash flow machine. So I believe that that is not really a problem at all, at least for me. I know Costco is not going anywhere. I know Costco is a free cash flow machine. So again, so that level is pretty good. Looking at more on the return on capital, this is where the compounding effect came from. And this is why Costco stock has been such an amazing compounder for many, many, many years, because it has high return on capital. And this is something really good in terms of compounders. Even, Charlie Munger, I believe, said that if you find a stock, for example, that has a 10% return on capital, normally you're going to get around 10% a year. Now, in this case, Costco has been getting around 22 to 23%, return on capital. And if we look at the chart of the past 5 years, it was returning around, 24 or 25% compounded for the past 5 years. And, the return on capital is pretty close. So we can see that Charlie Munger is somewhat right in this case. And Costco does have high returns on capital. Now, going into some things that I did not really like about Costco, and they are hard to find because Costco is a high quality name. But the best thing you have to do with those high quality names is to make sure you don't really overpay for them or for the moat that they actually have. Now, Costco, something I don't like is the gross profit margins. It peaked around 13.5% in May of 2020, and it went from 13.5% to around now 11.8%, which is, again, it's been steadily declining. And this is something I don't like. And that, to me, shows me that Costco is having to eat some of the cost so it can keep getting, consumers. Because the way Costco, many times attracts other consumers, they try to make the products cheaper, for example, than Walmart or cheaper than, Target. And for example, if they want to make them cheaper, they may be having to kind of not really get much on those margins just to keep them, cheaper despite prices and costs going up, and this is putting a lot of pressures on gross profit margins. Now, the other hand is because Costco is such an amazingly managed company, if we look at the operating margins, yes, the gross profit margin has been declining, but the operating margin has been holding steady, mainly because Costco has been cutting a lot of cost on, things like with employees, on, bills and salaries and electricity bills and many other kind of costs they have been cutting on, because they were able to maintain the operating margin. But I don't know for how long they can keep doing that. Maybe the operating margin is eventually going to start declining as gross profit gets lower and lower and lower. So this is, again, a red flag with Costco. And many of you will say, no, it's not a red flag. Well, there's no stock that's perfect. There's nothing wrong with it. This is what I believe is wrong with Costco. And I don't believe they can really maintain the operating margins and keep cutting costs forever, in my opinion. All right. Now, looking at something else, with with Costco, which is something very important to look to, and this is a valuation. All right. So again, Costco is an amazing business, but with amazing businesses, the biggest mistakes investors make is they overpay for them. And if you overpay, you're going to get mediocre return in the long term. Even though the business does amazingly well, you're still going to get bad returns if you overpay. Now, looking at a basic, PE ratio, now is sitting at 35.5 times earnings. The mean for Costco stock was 28.5 times. So we're already, over in terms of valuation for Costco. Now you can make the argument that yes, maybe they have higher return on capital and some things are better with the business, so maybe they deserve such a valuation. But I don't personally believe so in this environment. So that to me shows me that Costco is a little bit over in terms of valuation. Now that gets me to my valuation model. This is when I use my numbers, my valuation to kind of determine if Costco is a buy right now, or if it's maybe something we should wait on, for the future. Because I'm sure most of you that watch my channel are a little bit patient like me. So if you really kind of find something, maybe it's a little bit overpriced, what I do is I put my price alert on it, and if for example it's $300, it reaches 300, this is when I get notified, and this is when I buy the stock. Now looking at the numbers, around $226 billion of revenue, it's growing around 8%. Now why did I use 8% for the next 5 years? Because if we look at the historical growth for Costco, it's grow between 3% to 8%, 9%. It grew exponentially well in 2021 and 2022. I don't believe this is going to continue, and the analysts also believe this is not going to continue, and they have it growing between 8 to 6%, just like what it was growing before. And I believe 8% is a fair number to use for a kind of a growth rate for Costco. Their net income margin is around 2.7%. It's very small because Costco makes most of its revenue actually from memberships and stuff, and this is where they make the big kind of net income margins and stuff. So 2.7% is the net income margin. You come up with around $9 billion of net income in 2027. So now we're going into 2023. This is around 5 years from now. Now using a 35 PE, you may say, no, Costco deserves to trade higher than 35. Now 5 years from now, I believe even 35 is a little bit rich for something like Costco, because maybe it can't keep growing 8 to 10% forever. Maybe it's going to grow 4 to 5% just because the company is becoming much bigger. You have to always keep that in mind. But if I just use a 35 times earnings, and you cannot justify that Costco should be trading at 45 or 50 times earnings. So I think 35 is fair. Now, even if you use 35 times earnings, you come up with around a $315 billion market cap in 2027, or only around 53% upside from current prices, or around 9% compounded every single year for the next 5 years. Now, I don't know about you, but to me, such a return doesn't really excite me with Costco. I cannot really see how can I be wrong with this valuation model. I think if you use, a 30 PE, the return is like 31%. But even if you use a 40 PE, is still 75%. And I personally like to double my money every 3 to 5 years. And Costco does not fit this kind of category for me. So therefore, I believe Costco is overpriced. It's hard for me to say it because many of you like it. But I believe Costco is overpriced. Under $400 per share, in my opinion, Costco would be looking much, much better, and that would put it, somewhere close to what it was. I don't know what it's showing that, but it could put it somewhere, pretty close to what it was pre-COVID. So under $400, it could get much more interesting, but at current prices, with even a maximum of 40 PE, you're still only getting 75%, a lot of uncertainty. To me, Costco is not worth the risk reward. So I hope you enjoyed this video. If you did, please press the like button and make sure and maybe consider subscribing. So I hope to see you in another video.